welcome to the deep dive.
Great to be here.
Today, we're taking a closer look at Bitcoin's recent activity, particularly the last 24 hours or so, August 13th to 14th, 2025.
Yeah, it's been pretty eventful.
Definitely. We've seen some really significant movements. So our mission today is, well, to unpack these shifts. What do they tell us about Bitcoin's evolving role, in the whole global financial picture?
Right. Trying to make sense of the noise.
Exactly. We'll be pulling insights from recent market data, top headlines, trying to give you a clear, nuanced picture without getting too bogged down in the jargon.
Sounds good.
Okay, let's unpack this. So kicking things off with the immediate attention grabber.
The big number.
Yeah, Bitcoin just hit a new all-time high, $124,533. That was on August 14th.
A huge psychological level. And a technical one, too.
Absolutely. Overcoming that barrier. But here's the catch, right? It wasn't just a straight line up.
No, far from it.
Almost immediately after reaching that high, the price saw a pretty sudden dip.
And what's fascinating here is the immediate why behind that dip. It ties directly to some U.S. economic data.
Okay.
We saw the release of the U.S. Producer Price Index, the PPI, for July.
Right.
And this report, well, it showed producer prices rose 0.9% month over month and 3.3% year over year.
And that was higher than expected.
Both figures were higher than analysts were forecasting, yeah. And this hotter than expected inflation data, it immediately sent ripples through the market. We saw a sharp decline, not just in Bitcoin, but Ether prices too. Bitcoin specifically dropped over 2%, down to around $118,600 right after that report hit.
Wow, that fast.
Instantly. Because this PPI data, it basically dampened hopes for the Federal Reserve cutting interest rates anytime soon.
Okay, so it impacts Fed expectations.
Exactly. And that negatively affects what the market sees as risk assets. Like Bitcoin. When borrowing costs look like they'll stay high, investors tend to get, a bit more cautious.
That immediate reaction to macro news is really stark.
Yeah.
It almost makes you wonder, doesn't it, if Bitcoin's original sort of anti-establishment narrative is fading a bit.
That's a really critical observation.
What's your read on that immediate sensitivity? Does it suggest a fundamental shift in how we should think about Bitcoin's resilience?
Well, look, while Bitcoin has often been pitched as uncorrelated, its reaction to the PPI just reinforces this growing connection to broader economic indicators. It shows that even with its unique properties, it's definitely not immune to traditional market forces, especially forces that impact liquidity and, like I said, investor sentiment around risk assets.
Right.
So this sensitivity, I think, suggests a market that's maturing. It's integrating more into the wider financial ecosystem where things like central bank policy really, really matter.
So a quick reaction to macro news. But what's truly compelling, I think, is the underlying strength Bitcoin was showing before that PPI shock hit.
Yeah, that's the other side of the coin.
Even with that recent dip, the market was really humming with bullish momentum leading right up to that point.
Absolutely. The technicals look very strong.
They were screaming positive, weren't they? Like the moving average convergence divergence, the MACD histogram. It showed its most bullish spread since way back in July 2025. That signals a powerful upward trend.
A strong indicator.
And the relative strength index, the RSI 14. It was indicating really robust buying pressure, but still had room to run before hitting that traditional overbought territory.
Yeah, around 68.56, I think. Strong momentum.
And it wasn't just the charts saying this. Experts were eyeing even, loftier targets.
Right. People were getting quite bullish.
Tony Sycamore, he's a market analyst at IG, suggested that if Bitcoin could sustain a break above $125,000,
which it briefly touched.
Right. He thought it could realistically propel Bitcoin all the way to $150,000.
A big call.
And Vikram Subbaroj, CEO of Giadas.com, he observed that the recent breakout had kind of cemented $120,000 as a new solid support level.
Floor, yeah.
And that $126,000 was emerging as a really pivotal point, like the key to unlocking the next big leg higher. But here's where it gets really interesting, I think. When we look beyond the charts, beyond the expert predictions, to the actual behavior of the big players, the whales, and the real flow of money.
Exactly. The on-chain data, that gives us a much clearer, transparent look at what's actually happening with transactions, with wallets, and it reveals some fascinating contrasting trends.
Contrasting? How so?
Well, first we saw this record surge in what we call whale wallets. These are the addresses holding, say, 100 Bitcoin or more.
Okay, the big holders.
Right. The number of these wallets hit a new all-time high, nearly 19,000 addresses.
Wow.
This significant accumulation by large holders, it signals really strong conviction, a long-term bullish outlook. When these big entities are holding tight, it implies a potential supply squeeze. Fewer coins actively trading.
They're playing the long game.
Seems like it. But here's the contrast. We also saw something different happening with long-term holders, or LTHs.
These are the really established investors.
Exactly, the ones who've held for a while.
Yeah.
And we saw them sell off, or maybe distribute is a better word, 300,000 Bitcoin just in July.
300,000. That's a lot.
It's the largest monthly distribution from LTHs since way back in 2021. So you've got this dynamic. New large capital seems to be flowing in, grabbing supply.
The whales.
While on the other hand, some of the early seasoned investors are taking profits off the table.
Okay, so selling pressure from one group, buying from another.
Precisely. But here's the crucial point, I think. The market's ability to absorb that significant supply and 300,000 Bitcoin is significant while still managing to reach new all-time highs. That points to genuinely robust underlying demand.
So the new buyers soaked it all up.
It suggests that. It points to a more mature market, maybe, where profit-taking is met by fresh capital rather than causing a market collapse like we might have seen in earlier cycles.
Interesting. Less speculative froth, maybe.
Yeah, potentially. It hints at more fundamental strength, maybe deeper liquidity in the market now. And there's another crucial on-chain metric we should touch on. Open interest, especially in the derivatives market.
Okay, futures and options.
Yeah. Binance's open interest for Bitcoin futures, that's the total value of all outstanding derivative contracts, it's surged to a record. Around $16 billion.
$16 billion. That's huge.
It really is. It indicates a very, very high level of leveraged positions in the market.
So people are betting big, using borrowed money.
Essentially, yes. Now, on one hand, this reflects strong bullish sentiment. Increased participation. People are confident, right?
Sure.
But it also introduces heightened risk, significant volatility risk from potential long squeezes or short squeezes.
Right.
It makes the market very susceptible to rapid price swings if things move sharply.
So it amplifies moves in both directions.
Exactly. It tells us there's a lot of conviction, but also a lot of risk baked into the system right now.
You highlight that double-edged sword of high open interest. Huge conviction, but also huge risk. How do you see the market navigating that kind of tension? Especially if we get another unexpected macro shock like that PPI data?
Yeah, that's really the million-dollar question, isn't it? The sheer volume of these leveraged positions means that any significant price move, up or down, can trigger cascades of liquidations.
A domino effect.
Right. It adds this element of reflexivity to the market. Price moves cause more price moves. Navigating this, it requires really sophisticated risk management from the traders involved. But for the broader market, it just means we should probably expect continued short-term volatility.
Even within a longer-term bullish trend.
Yeah, I think so. It's just a sign of an increasingly sophisticated but also inherently more leveraged market structure.
And that robust underlying demand you mentioned earlier, the demand that absorbed the LTH selling. A huge part of that seems to be coming from, well, growing acceptance and capital flow from institutional and corporate players.
Undeniably, the institutional footprint is growing larger.
For example, institutional Bitcoin activity on Coinbase. It reached, a staggering 75% of all Bitcoin trading volume there in the past week? That was as of August 13th.
75%. That's a powerful indicator of just how much institutional demand is expanding.
These are the big players, right? The funds, the traditional finance giants.
Yeah, and they're becoming a dominant force in price discovery, it seems.
And it's not just trading volume either. Look at the spot Bitcoin ETFs.
The exchange-traded funds, big development over the last year or so.
They logged an impressive 6-day streak of inflows. Over $3.6 billion added in just the past month.
Huge numbers.
For traditional investors, these ETFs are just such a game changer, aren't they? They provide accessible, regulated exposure to Bitcoin without needing, wallets and keys.
Makes it much easier for them to allocate capital.
And in just the last 24 hours alone, the total volume for all the U.S. spot Bitcoin ETFs was $4.70 billion.
Wow.
And get this. BlackRock's IBIT, just one fund, accounted for $3.61 billion of that total volume.
BlackRock's fund has been incredibly successful.
It really shows this isn't just retail hype anymore. This is serious, traditional capital finding its way into Bitcoin at an unprecedented scale. And beyond just investment vehicles, we're seeing really strong corporate conviction, too.
Holding it on the balance sheet.
Exactly.
Right.
Like Elon Musk's SpaceX, they confirmed on August 14th they still hold 8,285 Bitcoin.
Worth about $1 billion now.
Roughly $1.02 billion, yeah. And crucially, that amount hasn't changed since 2022.
So they've held through the ups and downs.
Right. It's not just like a line item on the balance sheet. It feels like a powerful signal to other big blue-chip companies, it says. Bitcoin is now a legitimate, strategic treasury asset.
Could definitely encourage others to follow suit. We haven't seen a huge wave yet, but maybe this helps trigger it.
Yeah, maybe a domino effect we haven't seen before. But the innovation, it doesn't stop at just holding it, does it?
No, we're seeing more creative uses.
Consider Metaplanet. Yep. They're a Japanese firm. They not only tripled their assets in Q2.
Impressive growth.
But they're also launching Bitcoin-backed preferred shares.
Okay, what's the angle there?
It's designed specifically to target Japan's yield-starved fixed income market, offering a Bitcoin-linked return.
Interesting. Finding yield in new places.
And they're not just doing that. They also acquired another 518 Bitcoin on August 12th. That boosted their total reserves to over 18,000 Bitcoin.
They're really going all in.
Metaplanet's move, it shows Bitcoin transforming, maybe, from just digital gold into something more flexible. A yield-generating financial instrument, actively bridging crypto innovation with traditional finance needs.
A potential blueprint for entirely new kinds of capital inflows.
Totally. And we're even seeing new players enter the space, some with political connections. Thumbs Up Media, a firm with shares held by Donald Trump Jr. They announced they raised $50 million. And that capital is earmarked for crypto treasuries and even mining operations.
Interesting timing given the political climate.
It highlights a growing mainstream acceptance, perhaps, and maybe signals a potentially favorable political alignment for the asset class.
These examples definitely illustrate how diverse the adoption is becoming. It's not just one type of player anymore.
Right.
And if we connect this back to the bigger picture, the macroeconomic backdrop, Bitcoin's recent surge before the PPI dip, it actually mirrored gains in U.S. equities quite closely.
Increasing correlation again?
Yeah, this growing correlation with traditional financial markets suggests Bitcoin is maturing, maybe, moving from just a niche asset to something increasingly viewed as, well, a risk-on growth asset.
Like tech stocks or something similar.
In some ways, yeah. Earlier, remember, we had softer U.S. Consumer Price Index, CTI, data.
Right, that helped the market initially.
It bolstered expectations for a potential September interest rate cut by the Fed, and that's generally bullish for risk assets. But then, as we discussed, the more recent hot PPI data threw some cold water on that, causing that brief but significant reversal.
Shows how sensitive it is to that Fed narrative now.
Very sensitive. And then there's the other macro angle, the expanding U.S. national debt. It's at a record $37 trillion now.
Staggering number.
Coupled with M2 money supply growth. It just reinforces Bitcoin's core narrative, doesn't it? As a scarce, hard-capped asset.
The digital gold argument.
Exactly. In this kind of environment, it's increasingly seen as a potential hedge against inflation, against currency debasement. It attracts investors looking to preserve purchasing power. And this whole macroeconomic backdrop, some analysts have cited it as setting the stage for Bitcoin to potentially reach $132,000 even.
So the macro tailwinds are strong.
They seem to be. It means Bitcoin is really moving beyond just being seen as like a speculative digital coin. It's now firmly on the radar as an inflation hedge against fiat debasement for serious investors.
Which implies that.
Yeah.
Well, traditional macroeconomic analysis is becoming way more important for understanding Bitcoin's moves.
I think it's becoming increasingly crucial, both for understanding its price movements and for developing investment strategies around it. You can't just ignore the Fed anymore. Sure. And adding to this whole evolving landscape, you've got the regulatory environment.
Which has been shifting.
Definitely. The current administration's stance, with President Trump declaring himself a crypto president.
Right.
And issuing that executive order on August 7th, allowing Bitcoin in 401k retirement plans.
That was a big deal.
It creates a very favorable regulatory tailwind, that kind of explicit political support. It's a significant de-risking factor, especially for institutional capital. It reduces that perceived regulatory uncertainty that held many back.
Makes sense. Less fear of a sudden crackdown.
Exactly. However, this raises an important question, a bit of a potential inconsistency, maybe.
Okay.
As of August 13th, the administration has been notably silent on the Tornado Cash verdict.
Tornado Cash, the privacy mincer.
Right, a privacy-enhancing technology. And this silence introduces uncertainty, doesn't it, regarding the future of privacy tools in the crypto space.
And that could have broader implications.
It could. Potentially for Bitcoin's fungibility, the idea that all Bitcoins are interchangeable. If some coins get tainted by privacy tools, does that affect things? It raises the question, how will the balance between fostering adoption, which they seem keen on, and regulating privacy aspects play out long term?
Especially if those priorities sometimes conflict.
Precisely. That's an important consideration for the asset's future, I think. Still an unanswered question.
Okay, so bringing it all together, what does all this mean for you listening? This deep dive, I think it shows Bitcoin's recent climb, isn't just one simple thing. It's truly multifaceted.
A lot of moving parts.
Definitely. It's being driven by clearly robust institutional demand, real corporate adoption, not just talk, and some significant favorable macroeconomic tailwinds, like that inflation hedge narrative. And on top of all that, these regulatory shifts are playing a crucial role. They're de-risking the asset, making it more palatable, more accessible for the bigger, more traditional players.
That's a good summary. But despite that strong bullish trend, it's clear there are inherent complexities still very much at play.
Right. The volatility isn't gone.
Not at all. That dynamic tension we talked about, new capital coming in versus long-term holders taking profits, coupled with that huge surge in leveraged positions, it just means short-term volatility remains a very real possibility. We saw it with the PPI reaction.
Expect bumps in the road?
I would. However, the market's resilience, its ability to actually absorb that significant profit-taking while still hitting new highs, that points to something deeper. A fundamental shift, perhaps, in Bitcoin's ownership structure and perceived value.
So, real demands, not just speculation.
It suggests robust underlying demand, yeah.
Right.
Not purely speculative froth like maybe in past cycles. And Bitcoin's trajectory, it's just becoming increasingly intertwined with global financial systems. There's no denying that now.
Which
means traditional macroeconomic analysis, understanding inflation data, central bank policies, risk appetite, it's becoming absolutely crucial for understanding Bitcoin's movements going forward.
That's a really powerful insight. And it leaves us with a thought-provoking idea, perhaps. Given Bitcoin's growing sensitivity to traditional economic indicators, to policy decisions, what does this evolving role mean for its original vision? You know, the vision of a truly decentralized, uncorrelated asset.
Yeah, how does that original narrative hold up now?
Exactly. And how might that narrative shift even further in the coming months? Something for all of us to ponder as we close this deep dive.